Wall Street just crashed after 3 days of record highs. Your money is about to get rocked. The man in charge of the Federal Reserve just told the world he is walking a tightrope, and we're all stuck in a challenging situation. I'm talking about Jerome Powell, and he just signaled that the stock market party is officially over. He gave little hope for fast interest rate cuts, even though the economy is clearly slowing down. Here's the massive conflict the Fed is facing right now. They have two jobs: keep prices stable and keep employment high. Right now, those two goals are fighting each other. Prices are still high, running close to 3% inflation, which is way above their 2% target. That normally screams, raise interest rates. But jobs are getting weak. That weakness screams, cut interest rates. Powell admitted there is no risk-free path forward. This is why the major stock indexes, the Dow, the S&P 500, the NASDAQ, all dropped hard right after he spoke. Why the sudden panic? Because Powell hinted the stock market is looking fairly highly valued right now. When the chief financial officer of the country says stocks are too expensive, investors listen. Last week, the Fed cut the main rate by a quarter point, bringing the range down to 4% to 4.25%. They called this a risk management cut, basically admitting they had to act because the job situation looked so bad. But Powell is now pumping the brakes on future cuts. He gave this serious warning: if they cut rates too aggressively, prices will spike again and the Fed will have to reverse course and hike rates later. But if they keep rates high for too long, a necessary labor market slowdown could turn into an outright crash. The bottom line is that the market expected a guarantee of more cuts soon, maybe 2 more cuts by year-end. Powell gave zero guarantee. He said policy is not on a preset course, meaning they are watching the economic numbers every single day before making a move. The job market is the biggest threat right now. Powell acknowledged that the labor market has cooled more than they expected. Job creation has averaged only about 30,000 new positions a month over the summer. That is nowhere near enough to keep the unemployment rate steady. The unemployment rate itself has crept up to 4.3%. The Fed is finally admitting that the risk of high unemployment has risen. We're seeing serious division inside the Fed itself. They're having a full-blown war over whether to save prices or save jobs. One new Fed governor, appointed by the president, publicly called for massive cuts, arguing that rates should be nearly 2 percentage points lower right now. This guy wanted a huge half-point cut last week because he believes keeping rates this high risks unnecessary job losses. Another powerful governor agreed, warning that the Fed is at serious risk of being behind a curve on the labor market and needs to act faster and cut deeper. But other top officials are pushing back hard, arguing that since inflation has run hot for about 4.5 years straight, we need to be extremely careful before cutting rates aggressively. They're worried that all these temporary price jumps will become permanent inflation. This all leads back to where those prices are coming from. Powell says the price hikes are mainly being driven by tariffs, not a broad-based inflation problem everywhere else. He insists this tariff effect is a one-time price increase, but that does not mean it happens instantly. This is the crucial information I promised you at the start. The higher prices caused by tariffs are absolutely coming, and they will likely show up as somewhat higher costs for you, the consumer, spread out slowly over the next several quarters. Powell confirmed that while American companies have been paying most of the tariff costs so far, slowing down hiring might be one way they're quietly passing those costs off. The final hit on your wallet from these tariffs is still working its way through the entire system. The Fed has to make sure this slow, steady price creep doesn't suddenly explode into an ongoing inflation problem. Also, don't buy the hype about the political pressure. Powell said the Fed is never ever thinking about political things when making decisions, calling that whole argument a cheap shot. They claim they ignore the president's public attacks. In short, expect market swings because the Fed is confused, divided, and scared of either inflation surging or unemployment spiking. That's the honest truth about your money right now. If you found this useful, hit the like button below, subscribe so you don't miss our next breakdown, and ring the bell so you get all the alerts. Thanks for watching.